Today, we're going to be taking a look at three big names when it comes to the stock market: Apple, Google, and Tesla, and what this means for your portfolio, whether you're investing into them directly or getting exposure through your ETFs. We need to understand what's going on with these companies and how it will impact our portfolios. Let's start with Apple. This morning, they hit an all-time high of 277.57 and kept on going, hitting 280.38 before coming down a little bit. Current stock price 278.43. When it comes to Apple, recent headlines are showing us that they just made some cuts when it comes to their sales teams. Those people that go out to the big businesses, the schools, the government agencies. They've also trimmed their staff when it comes to those employees that were going out to do meet and greets and demo their products out to clients. So Apple's not doing a broad layoff throughout the whole company. They're still hiring in some areas and making some effort to move some employees around. Also in Apple headlines, they were saying that Tim Cook, the CEO who's been in place since 2011, might be stepping down soon, but probably not until sometime after 2026. He just turned 65, and some were expecting him to set up his transition out of the company soon. But the sense is Apple values stability and wants to manage any leadership change very carefully. So, why does this matter to investors? The job cuts themselves show that Apple is evaluating how they sell to large organizations, striving to improve their efficiency and margins. Tim Cook staying on means the leadership is not about to have a sudden shift. For long-term investors, that's a good thing. No drama, no risk of a shakeup when it comes to the shares, the stock price, when we have to go through that transition of a new CEO. For right now, it looks like Apple is holding steady. It's a more mature company whose days of massive growth might be behind it, but it's one that I've been holding for some time now. It still has strong cash flows, a massive ecosystem of products that people are highly dedicated to. And so this sales team adjustment is just part of being in that mature stage. The CEO, not likely to transition out anytime in the near future, also gives us a bit of comfort when it comes to this company. Well, they also have a ways to go when it comes to capitalizing on AI when it comes to their products. So still more room to grow. Currently, the second largest company by market cap in the US at 4.1 trillion. When it comes to my portfolio, I'm currently up about 80%. Now let's move on to Google, the third largest company currently at 3.8 trillion. Google's up just 0.5% today, but it definitely has been climbing lately. There are a few key reasons investors are excited about Google's growth in AI and cloud computing. Google has been improving their AI tools, their cloud businesses, the companies that they manage that are used to store data is an area that's growing. And on top of that, their profits have been stronger than expected. All of this makes investors feel more confident. It is a company that we're using everywhere through search, YouTube, Gmail, Maps, ads, and now they are really thriving when it comes to AI. That's why people love it long term. The only thing to watch is it's been rising very fast. And so we have to be ready for a little bit of a cool down. Google has definitely been one that's been slow and steady when it comes to my portfolio. I'm currently up 145%. It's one of the top performing investments when it comes to my individual stocks that I've incorporated in my portfolio. I currently have 25 shares that I built up little by little over the last few years. Looking back, I'm glad that I was adding to my position little by little when it was under $100, around $150, seeing where it's at today. In the short time that Berkshire Hathaway has added it to its portfolio, $4.3 billion worth, they're already up over $1 million on their investment. But whatever your budget is, I just want you to see the power of investing, buying and holding for the long term. Over the last 5 years, Google is up over 200%. Never financial advice. I'm just here sharing my personal investing journey and stock market news with you. But I just want to encourage you not to let the opportunity of investing pass you by. It does not have to be through choosing individual stocks. I often talk about my foundational investments, those funds that provide my portfolio with stability, quarterly dividends, steady growth. But I'm also seeing significant gains when it comes to my investments by incorporating individual companies like Google. Now, last one for today, we're going to take a look at Tesla. Slightly down on the day, they had a few moves up over the last few days. The most recent headlines are highlighting that European sales are down, but Elon is one to watch. There's always lots of volatility when it comes to Tesla. So, Elon has been going on about how Tesla is not just a car company anymore. He says Tesla is really an AI and robotics company that also sells cars. And this is because Tesla has millions of AI chips already in use. They're working on new versions of these chips. They're hiring more people to push deeper into AI and how it will be the future of the company. So investors hear AI plus Tesla. They know about Elon's potential pay package and what he hopes to achieve with the company. And we have those jumps when it comes to Tesla stock. I have larger positions in Google and Apple, which we've already talked about today, but I have Tesla in my portfolio also, more volatile. I'm currently up about 89% when it comes to Tesla, where I just recently was up well over 100, but I'm holding for the long term because of the potential upside. If they pull off what they're trying to achieve when it comes to AI, the robots, incorporating those self-driving vehicles, zooming out to the 5-year performance, another investment that's up over 200%. I think long term when I incorporate companies into my portfolio, but for the more risk adverse investor like me, you may want to keep Tesla a smaller position because it's not as steady as an Apple or a Google. The electric vehicle market is very competitive. Tesla has a ways to go when it comes to developing their self-driving vehicles and getting past any obstacles related to regulations. But I am comfortable holding on to this one for the potential growth. What's going on in the news? Apple is reorganizing and tightening up when it comes to their business. Continued growth and development when it comes to AI, and the stock price will continue to thrive. Google is riding the AI wave and flourishing when it comes to the stock market, surpassing Microsoft to be the third largest company. And Tesla reminding us that not just a car company, they're pushing hard when it comes to AI and robotics. So let me know in the comments, which of these 3 companies do you own? If you enjoyed this update, make sure to subscribe, like, hit that notification bell, hype this video. When it comes to investing, I have different goals, not strictly for retirement, and that's where I incorporate some of these growth stocks into a portfolio that I can tap into in early retirement or for whatever my needs may be. If you're ready to open a new portfolio, check out my referral link for MooMoo. We'll both get free stock, have access to an investment platform that has great research tools that's easy to use, and will have you on your way to build up your portfolio no matter your budget. Thanks for watching. Okay, bye.